Welcome to the Deep Dive. Today we're plunging into a decision that, well, many of you might be weighing up. Where in Thailand should you invest your hard-earned cash in property? We're specifically looking at that big choice between the tropical draw of Phuket, and just so we're all clear, that's Phuket, P-O-O-K-E-T, not Phuket, versus, the non-stop energy of Bangkok. Which one really gives you the best bang for your buck? So our mission here is simple. Dig into the details, pull out the key bits of knowledge from your sources, and help you figure out where your money might actually grow the most. We're mainly drawing on an article called Phuket versus Bangkok, Property Investment Returns Compared. Now, this comes from Ocean Worldwide. They're a luxury real estate agency, been rooted in Phuket since, 2004. Their marketing is overseen by Gail Ovidier-Tien, and it's worth mentioning the director, Sandra O'Neill. She's guided literally thousands of families and investors over the years. And Ocean Worldwide, you can see from their other articles like Why Phuket Villas Skyrocket in Value, they really focus on that high-end residential stuff, especially in Phuket and Koh Samui.
So yeah, that's the lens we're using today, very much focused on luxury.
Absolutely. And if we just, zoom out for a second, the Thai's property market overall, it's pretty dynamic. Generally, as an investor, you could be looking at an average ROI, return on investment, somewhere in the 6 to 8% range. Plus, the property itself often appreciates maybe 5 to 10% a year. And this is honestly the golden rule here. Those numbers depend hugely on location, location, location. It sounds like a cliche, I know, but it's just fundamental in Thailand.
Right, location's always key.
Always. And beyond that, you've got other big factors playing in. Tourism, obviously, is a massive driver for the economy. Then there's general economic growth, infrastructure popping up all the time, and of course, the type of property matters too. A luxury villa isn't the same investment as a city condo.
Oh, and one more thing for buyers. Right now, the government's actually made buying a bit cheaper. They've cut some fees, which is definitely helpful. We can get into that later.
Oh, okay, got it. So with that bigger picture in mind, let's dive into Bangkok first. Beyond the shiny towers and the legendary traffic, what's the real deal for property investors in the capital? Well, Bangkok's strength is really its diversity. You've got quite a range. There are those super swanky city center condos, prime locations, amazing amenities, the whole package. Then you have more mid-range apartments, still great value, really convenient, and townhouses too, offering more space, maybe a bit more suburban feel, good for families.
So options for different budgets, different needs.
Exactly. It caters to pretty much any investment strategy you can think of.
Yeah.
And when you look at rental yields in the popular spots, take Sukhumvit, for example. You're generally seeing about 4-6%. That reflects the high demand, but also the premium prices there. Siloam, the business hub, maybe a touch higher, 5-7%. Just a really strong rental market with all the professionals. Ratchada is interesting, too. It's often more affordable, still growing fast, and yields can push up to 6-8% sometimes.
Okay.
And actually, it's worth noting, if you're thinking short-term rentals, those condos right in central Bangkok, near the tourist hotspots, they can sometimes offer even better yield prospects than ones aimed just at long-term expats.
Interesting. And what about the property value itself going up, capital appreciation?
Bangkok's generally seen as pretty solid for capital preservation, basically protecting your initial investment. Growth isn't always explosive, It definitely depends on the economy, politics, global stuff. But the longer-term forecasts, say out to 2027, 2030, they look a bit more positive. The CBD, Central Business District, is maybe looking at 3-4% annual appreciation. So, yeah, investing in Bangkok property usually means playing the long game for the bigger rewards.
That makes sense. So if it's a long game, what does this current market situation mean for my budget right now? You mentioned this oversupply, only 35% of new condos selling. I mean, that sounds a bit worrying maybe, but you're framing it as a buyer's market. How does an investor actually use that situation?
That's a really good point. It can sound worrying, but it's actually a strategic opening. Because developers have all this stock, right? They need to shift it. So they're basically helping you get in the door with some really tempting offers. And we're not talking small discounts. It could be full furniture packages, maybe guaranteed rental income for a year or two. Sometimes they even cover a chunk of the fees for you.
Ah, okay. So the oversupply creates negotiation power.
Precisely. It turns a potentially flat market, price-wise, into a value opportunity. You can negotiate harder, get more extras thrown in, things you wouldn't get when the market's hot.
Right.
And just to give you a sense of prices, Bangkok CBD, you're looking at roughly maybe THB 236,000 per square meter. It's that prime location premium. But head out to the suburbs, prices can drop way down, maybe THB 72,000 to 127,000 per square meter. So those areas become much more accessible budget-wise. You might get more space for your money.
Okay, that clarifies the Bangkok picture quite a bit. Now, let's switch gears completely. Let's head south to the island, to Phuket. What makes this tropical spot so appealing for property investors specifically?
Ugh.
Phuket.
Well, the appeal is pretty obvious, isn't it? That incredible tropical island feel.
Yeah, definitely.
You've got world-famous beaches, Patong, Kata, Karon, stunning landscapes, that vibrant but still kind of laid-back vibe. All that just pulls in tourists and expats constantly. And the key thing for investors, that translates directly into really strong, consistent rental demand. Short-term holiday lets, longer-term stays for expats, there's always demand.
It creates that sort of luxury scarcity you mentioned.
Exactly, in those prime spots. And the property options reflect that too. There's a real range. You've got those absolutely stunning high-end beachfront villas, private pools, ocean views, the kind of thing Ocean Worldwide specializes in.
Right.
But you also find modern condos, maybe with resort facilities, and even more affordable townhouses or apartments if you look a bit further from the beach. So again, diversity for different investment levels.
And tourism is the engine driving it all, I assume.
Oh, completely. Tourism is Phuket's economy, basically. It directly dictates how healthy the rental market is. High season, demand goes through the roof, rental rates climb. Low season, it drops off a bit, sure, but there's still a pretty steady flow. It doesn't just die. Especially in the real hot spots, places like Laguna, Surin Beach, Bangtao Beach, occupancy rates stay remarkably high year-round almost. And we've seen tourism bounce back close to pre-pandemic levels now. Plus, there are new visa rules making it easier for people to stay longer, which is only boosting rental demand further. It's a robust market, very clearly linked to visitor numbers.
Okay, let's get down to the numbers then. Head to head, Phuket versus Bangkok. What are the rental yields really looking like? Thinking about passive income. How much more work is involved managing a tourist rental in Phuket compared to, say, a long-term expat place in Bangkok? Are there hidden costs in chasing that higher yield?
That's a key question, yeah. And the numbers are pretty clear on potential income. Phuket generally boasts higher rental yields. It's known for it. That's overwhelmingly driven by tourism. You could potentially see monthly rents anywhere from, say, THB 95,000 up to maybe THB 180,000 for the right property.
Wow, okay.
Especially pool villas, larger apartments in those prime spots we mentioned, Laguna, Surin, Bangtao. The tourism recovery is feeding this, and those easier visa rules definitely help.
And Bangkok CBD in comparison?
Bangkok offers more, let's say, stable or predictable returns. Now, the absolute rent on a high-end property might be higher, maybe around THB 236,000 a month, like we touched on, but the percentage yield compared to the property cost, often lower than Phuket's best performers. Bangkok's income stream relies more on expats, business folks needing long-term places.
Right, less seasonal.
Exactly. So it's generally a more consistent income, potentially lower percentage ROI than peak Phuket, but also less volatile, less risk from seasonal dips.
Okay, and the management side. Is Phuket much harder work?
It can be more hands-on, yes, if you're trying to do it all yourself. High turnover from tourists means more check-ins, check-outs, cleaning, dealing with guest queries.
Yeah, sounds like a job in itself.
It can be, but that's where professional property management really comes in, especially if you don't live there. These companies handle everything: marketing, bookings, cleaning, maintenance, guest communication. They let you tap into those higher yields without the day-to-day hassle.
So the management fee is the trade-off.
Exactly. It's a cost. And it might be higher for short-term lets because it's more intensive work, but it's usually essential to make it work smoothly and keep occupancy up. Managing a long-term rental in Bangkok might seem simpler day-to-day, fewer changeovers, but you still need good systems. Tenant issues can pop up anywhere. And just quickly, other places show potential too. Pattaya's tourism is growing fast, so yields are high. Hua Hin is popular for retirement, medium yields. Chiang Mai, medium, attracts digital nomads. And those EEC areas, the Eastern Economic Corridor, high potential there because of all the industrial growth.
Fascinating comparison. Okay, shifting focus slightly. What's the crystal ball saying about property prices in Thailand overall? Short-term, long-term? Is it looking positive, or should investors be cautious?
Well, short term, thinking 2025, 2026, the market's expected to see a decent recovery. Property transfers are forecast to go up around 3.7%. In Bangkok, condo prices will likely stay pretty stable, maybe just a tiny 1-2% increase. That's mainly because there's still quite a bit of available stock, that oversupply we talked about.
So the government fee cuts are helping hold things steady.
Yeah, exactly. They're helping to prevent any sharp drops, sort of steadying the ship.
And longer term,
Yeah.
say 2027 to 2030.
The outlook generally gets a bit brighter then. Bangkok CBD might see 3-4% annual growth. The outskirts, though, maybe only 1-2% as that oversupply slowly gets absorbed. But tourist spots like Phuket, they could see stronger growth, perhaps 4-5% a year. That's fueled by the rental income potential and continued international demand.
And the EEC.
The EEC could be the real riser, potentially 5-6% annual growth, driven by all that industrial development and infrastructure investment.
Okay, but that oversupply, particularly in Bangkok, is still a factor.
Definitely. It's going to take time, probably 2 or 3 years, for the market to fully absorb that glut of properties. That's keeping a lid on prices right now, especially in the cities. But as we discussed, for savvy investors with a long-term view, this is actually an opportunity. It's a buyer's market, better negotiation potential. You get in lower now, potentially benefit later.
Right, it's not just about the purchase price itself, is it? Let's dig into the practical stuff. Fees, ownership rules, potential pitfalls. What are the costs beyond the price tag? How does foreign ownership actually work? And what are the big risks to keep an eye on?
Good point. The hidden costs matter. The good news, first off, is those extended fee reductions we mentioned. They run until June 2026 for properties up to 7 million baht. So the transfer fee drops from 2% way down to 0.5%. Mortgage registration fee from 1% down to 0.5%.
That sounds like significant savings.
It really is. On a 5 million baht place, you could save around 100,000 baht. It's a real incentive from the government.
Okay. And foreign ownership, that's always a bit tricky, isn't it?
It is, and it's crucial to understand the main rule. Foreigners can't directly own land in Thailand. Full stop.
Right.
But there are common legal workarounds. The most usual is a long-term lease, often 30 years, usually with options to renew. That gives you effective control for a very long time. The other route is setting up a Thai company to own the land and property. That has its own legal hoops to jump through.
So homework and lawyers are essential.
Absolutely essential. Do your research, get proper legal advice. Don't try to cut corners here. You need to make sure your investment is secure. And for people not living in Thailand, it's a big plus that there are really well-developed property management systems available. They handle everything, makes remote ownership much, much easier.
And in terms of minimizing risk, location is key again.
Yes. Sticking to established areas like central Bangkok or the main tourist spots in Phuket is generally seen as a safer bet. Demand is proven, the market's more resilient.
What about the bigger picture? Economy, politics?
Well, the GDP growth forecasts, around 3.0–3.5% for 2025, suggest things are reasonably stable, maybe improving. Government stimulus, like the fee cuts, is aimed at boosting things, but you do need to be aware of risks. There's high household debt in Thailand. Banks can be quite strict with lending. Global economic wobbles always have an impact.
And the Chinese economy slowing down. Does that matter?
It potentially does, yeah. Chinese buyers have been a significant segment, so a slowdown there could affect demand. It just underlines the need for really thorough research and getting professional advice before you jump in.
So pulling it all together, what does this really mean for you, the listener? It sounds like choosing between Phuket and Bangkok really comes down to what your personal investment goals are. It's this balance of opportunity and risk.
Exactly right. It boils down to priorities. If you're primarily chasing strong, steady rental income, maybe good capital growth, and you want to tap into that tourism recovery, well, Phuket looks very compelling. That mix of luxury appeal and high visitor numbers drives those yields.
But if safety comes first?
If capital preservation is your main goal, and you want a more stable, even if maybe slower, return, then Bangkok CBD could be a better fit. The income's more predictable, less tied to tourism ups and downs.
So different paths for different investors.
Precisely. Neither is definitively better overall. The best choice really depends on your individual risk appetite and what you want your investment to achieve for you.
Okay, so as you, our listeners, ponder your next move in Thai real estate, here's a final thought to chew on. Thinking long-term, maybe the next decade, what kind of unexpected impact could these new, easier visa rules or maybe the accelerating industrial growth in the Eastern Economic Corridor actually have on this whole stable Bangkok versus high-yield Phuket dynamic?
Yeah.
Could those factors quietly reshape how we view these markets just a few years down the line?